Have you ever stared at a financial chart and it just looks like a jumble of red and green bars? Yeah, me too. But what if I told you those bars are actually telling a story? It's a story about a constant battle between buyers and sellers, and in this explainer, we're going to crack the code. We're going to learn how to read the secret language of the charts. You know, this whole idea really kicked off when we saw this from the folks over at Trading Lab. They pointed to one specific pattern on a chart and said, "That's how we knew." And that call apparently netted them a huge 10% gain. That's the kind of power we're talking about here, turning what looks like total noise into a real signal. Let's be honest. For most of us, these charts are just chaos. It feels like trying to predict a hurricane by staring at some clouds. It just seems impossible, but it doesn't have to be. Today, we're going to give you the tools to start learning this language, one simple pattern at a time. Okay, let's start by cracking the code. We need to get a handle on what these patterns really are. And I want you to think of them less like some kind of magic formula, and more like a language that's communicating what the market is feeling. Now, this is absolutely crucial. These patterns are not a crystal ball. They do not, I repeat, do not guarantee what's going to happen next. The source material is super clear about this. They're just hints. They're powerful visual clues that if you use them the right way, can give you a real edge. Alright, let's get into the good stuff. The first set of patterns we're looking at are all about spotting when the tide might be turning. These are the signals that a trend is maybe running out of gas and is getting ready to flip around. So, first up, we have one of the heavy hitters, the engulfing candle. And honestly, the name pretty much says it all. You're looking for a candle that is so big, it completely swallows or engulfs the body of the candle that came right before it. When you see this, it's a sign of a really sudden and strong shift in power. And of course, there are two sides to this coin. On the left, you've got the bullish engulfing. That's when a big green candle swallows up a smaller red one, usually at a key support level. It's a hint that prices might be about to head up. The bearish engulfing on the right is the exact opposite. A huge red candle engulfs a green one, signaling, you guessed it, a potential drop. Next up, the doji. Now, what's so interesting here is the shape of this candle. You see how thin that body is? That means the price opened and closed at almost the exact same spot. It's basically a tie, a perfect stalemate between buyers and sellers. And that kind of pure indecision often happens right before a big reversal. And the doji has a few different family members, but they're all kind of telling the same story. You've got the long-legged doji, which shows even more uncertainty, or the dragonfly and gravestone, which show a clear fight at the top or bottom. But the main idea is always the same. The old trend is getting weak, and a change can be right around the corner. Okay. Let's talk about the tweezer pattern. This one gives us a really clear signal that the price is being rejected. It's a two-candle pattern, and the key thing to look for is that the wicks, the little lines at the top or bottom, of two candles in a row hit the exact same price point and then get pushed back. It's like the market knocked on a door twice, and both times nobody answered. And here you can see the two types. A tweezer top happens up at a resistance level. It shows buyers tried to push higher but failed. That's a bearish signal. A tweezer bottom, on the other hand, forms down at a support level. Sellers tried to push lower, got rejected, and that signals a potential rally. It's just a super clear sign of a ceiling or a floor holding strong. Okay, so that's reversals. But what about when a trend is already going strong and you want to know if it's going to keep going? Well, that's where continuation patterns come in. These are the signs that tell you the current momentum is still going strong, that the trend is, in fact, your friend. And first up for this category is the momentum candle. This one is so simple, but so powerful. You are literally just looking for a candle that is huge. We're talking 2 to 3 times bigger than the candles that came right before it. It's like a sudden explosion of energy after a really quiet period. So why does this work so well? Well, the source explains that when the market is just moving sideways, kind of choppy, a lot of traders get trapped. A giant momentum candle can blast through those levels, triggering all their stop losses at once. That adds a ton of fuel to the fire and it can kick off a brand new powerful trend. It's the ultimate breakout signal. Next we have the Marubozu. This candle is the ultimate sign of conviction, and I want you to look closely. See how it has no wicks? None at the top, none at the bottom. That means that from the very second the candle opened to the second it closed, one side was in complete and total control. No fight, no hesitation, just pure dominance. So a green Marubozu shows that buyers were in the driver's seat, from the absolute low to the absolute high. It's a strong sign an uptrend is going to continue with some serious force. A red one is of course the opposite. Sellers were in control the whole time, suggesting a downtrend has a lot more room to fall. It's an incredibly powerful confirmation. Okay, hold on. Before you run off and start looking for these patterns everywhere, we have to talk about the rules, because using this stuff without a proper framework is, frankly, a recipe for disaster. This might be the single most important part of this whole explainer. So here it is. Rule number 1. And the source material cannot be more clear about this. You never, ever make a trade just because you saw a candlestick pattern. If that's all you're using, you're not trading, you're just gambling. I want you to think of these patterns like a single piece of evidence in a big detective case. They're just hints. You have to combine them with other tools for confirmation. Is the pattern happening at a major support or resistance level? Do your other indicators agree? Does it even fit with your overall strategy? The pattern confirms your idea. It shouldn't be your idea. Alright, I know that sounds like a lot to keep an eye on, but here's the good news. The source gave us a fantastic pro tip to make this way easier. Let's look at how you can basically get an automated assistant to do all the hard work for you. So if you use a charting platform like TradingView, you can actually automate this whole process. You just go to your Indicators tab, type in the name of the pattern you're looking for, say bullish engulfing, and just click to add it. And boom, the platform will automatically put a little label on your chart every single time that pattern appears. It's a total game changer for spotting these things in real time. Now, as we wrap up, we have to end with a really critical word of warning. Because even if you follow all the rules, there is one huge challenge that every single trader who uses these patterns is going to face. And that big problem is the false breakouts. You know what I'm talking about. It's when you see a picture-perfect pattern, it signals a big move in one direction, and then the price just immediately turns around and does the exact opposite. It is super frustrating, it can lose you money, and trust me, it happens. And that right there brings us to the ultimate question. Spotting the patterns, as we've seen, is actually the easy part. The real skill, the thing that truly separates the pros from everyone else, is learning how to tell the difference between a genuine signal and a total fake out, and how to do that. Well, that's a story for another day.